Hello, everyone, and welcome to what might possibly be the last of our Wyckoff series. All right. So, what I wanted to do today, as I talked about in the last class, is to do a little bit of a recap of just about everything we've seen so far, and also talk about the final phase of Wyckoff theory, which is phase 8. All right. So, we actually talked about a bunch of stuff during this course. The very first things that we talked about were, the basics of the Wyckoff method, but by now I think you're familiar with it. So I'm just gonna skip that part. Uh, Next from that, we talked about the three fundamental laws that Richard Wyckoff postulates that move the financial markets. All right, and they are first the law of supply and demand, in which Wyckoff states that price will shift only with an initiative. So it doesn't change passively. So for price to change, someone must have an interest in either buying or selling actively. All right. Not with limit orders, but with market orders. All right. Next, we have the law of cause and effect. All right. So here, the law of cause and effect. And what the law of cause and effect states is that every single change in price, every single trend that you can observe, it has a root cause. All right. In smaller time frames, what you might see is that it is representative of an individual traders, sentiment and whatnot. And on larger time frames, and that is why I think larger time frames are, basically the only important thing that you should be looking at if you want to, catch actual swings in trend and, not try to scalp with little to no effectiveness, is that the larger time frames represent large traders, institutions, and market dynamics. All right. And the final and third law is the law of effort and result. And it states that basically effort is the amount of volume in a candlestick and the result is a price change. And those two are always correlated. Okay, you should always be looking at those two together. And when you see a discrepancy, you should look at it, very carefully. All right. If you want to go into the specifics, you can go back into these classes. All right. So next, we actually talked about accumulation and distribution, the basic processes. All right. So in accumulation, we identified a few patterns. All right. And the patterns are that first, in an accumulation, we usually see less volume and volatility as the accumulation progresses. All right. So we usually see higher volatility at the start, and as the range progresses, we see little to no volatility. All right. Secondly, the tests to the lower end of the range, they are usually with lower volume than the resistance tests. All right. So the support of tests, they have lower volume, and the resistance tests, they have higher volume. All right. The next characteristic is to do springs to previous lows. So testing previous lows, previous supports and resistances throughout that range. Specifically in accumulation, we usually test previous supports. All right. Next, the next pattern that we see is that accumulations usually have, slower movements to the upside than slower movement to the upside and faster movements to the downside. And finally, we can sometimes see the formation of higher highs and higher lows. Now, with these patterns, you shouldn't be looking at them as, just a checklist that every single one of these patterns should be in a range for it to be considered an accumulation or distribution. However, you should look at it like, some sort of general characteristics, right? Just because we say that humans have hair or something like that, it doesn't mean that you can't see a human with no hair at all, right? So next we talked about distribution, and distribution is basically the reverse. All right, we talked a little bit about this in almost every single class, but accumulation and distribution, they are very similar patterns. They are symmetrical to each other. So in a distribution, we usually see higher in volume and volatility as the distribution progresses. So at the start, we usually see lower volume and volatility, and at the end, we see a bunch of volume and volatility. So price is changing very rapidly, and we see a lot of market participants getting in. All right. Next, we see usually resistance tests with lower volume, right? Resistance tests and support tests with lower volume. Next, we see some upward shakes to previous highs. If it is, not a distribution like we saw here with Bitcoin, but usually in the stock market, we don't see new all-time highs too often. So the upward shakes might be testing previous highs, right? Finally, we see moves down being slower than moves up, and lower highs and lower lows. All right. Again, these are not just like a checklist that you should be looking at to identify if this specific checklist happens, it's an accumulation or distribution. You should be also analyzing the general market context. All right. So let's get right into phase E, which is trending outside the range. So this is basically the confirmation that we are out of the range, and that from now on we should be trending. And basically the most prominent feature of it is that we see first in phase D, way back in phase D, we see this, little support test of the top of the range. And again, we see this last point of support here, which confirmates, which confirms that we have no longer any interest in going lower. All right. So the phase E is basically consisting of the signs of strength or signs of weakness, and the last point of support, last point of supply. We talked about every single one of these events in the past, so I do not want to get too much into it. And phase E is really, really simple, right? It's basically just going outside the range and testing for support really outside of it. So we are definitely outside of the range. The next chapter would be trading. All right, if you guys want me to do a video on this, I can do it for you guys, but I personally think, and I have stated this ever since the beginning of this course, I think the ideas that Ruben points out here for trading and the specific patterns that you should be trading and whatnot, these are really, really weak. All right, I think that you will have very poor results actually if you try this. Now, I'm not saying you cannot succeed, but probably the best way to use Wyckoff method is to just try to distribute while you see a distribution, and try to accumulate while you see an accumulation, right? So I think that is, for the most part, the most powerful thing about the Wyckoff method, okay? To understand what market makers are doing and kind of follow them to build, a long-term investment as opposed to a short-term investment, okay? So yeah, what would phase E look like right now if we were in fact in an accumulation? So we could say that the range was about something like this, and I'm not saying this will happen, okay? I'm just saying to you guys what phase E would look like, okay? So we would have like a spring event or something like this, have a little spring event, then start trending to the upside. Let me just zoom out so I can have a little bit more room to draw. So you would have a little spring event like this, trend up here, test this as support, and then trend up here, test this back as support, and then come up, okay? So this is what legit, phase E would look like right now. All right, of course, I'm not saying this will happen, but if a phase E were to happen, we would see something like this. And it would, at least from what I think, make us go above the short-term holder realized price. And I've told this to you guys a few times already, all right? The short-term holder realized price is the strongest resistance on the short term and the medium term for a bear market. You can see it in the past year. So short-term holder realized price holds as really strong resistance here in the 2013 bear market. It does the same thing in the 2018 bear market, and it has done the same thing back here in 2022, about in March. All right. So in a real, trending outside the range, we would see price trending outside of that 25K zone and making it as support. All right. So yeah, a little bit of a shorter video. Again, this is the final video, so I hope you guys enjoyed this series. If you want me to do the trading part, just tell me and I can do it. But again, I don't find much value in it anyways. All right. So this was it. Thank you and goodbye.